Hello, citizens. Welcome to the first miningcity trading webinar. With me, your host, Greg Rogowski. I will tell you how traders buy, sell, and trade assets like Bitcoin, bitcoinvault, and Ethereum, as well as how to read charts. So let's begin. We will begin our session with a brief introduction about what cryptocurrency is, what an exchange is, and everything you need to know about cryptocurrency. Next, we will talk about understanding the charts, analyzing trends, and we will learn here about how to read and understand the charts, the basic terminology that may come across while studying the charts. And this, in turn, will help you to understand and analyze the current trends. This will enable you to make an informed decision based on facts and not just intuition. And then we will talk about how to buy and sell cryptocurrency. And last but not least, how to manage your assets. Okay, so before you can understand the world of cryptocurrency trading, you really need to get familiar with the basics. And to make it easier, I will provide simple definitions for the most popular terms that you will hear throughout this webinar. And one term you probably already know, all of you, is cryptocurrency, also called digital currency, also known as a digital asset. There are over 6,000 different cryptocurrencies, including Bitcoin, Ethereum, Ripple, or indeed bitcoinvault, just to name a few. Just like regular money, which in the crypto universe is called fiat money, by the way, cryptocurrencies are used as a medium of exchange, but they don't have a physical form. Yet, they still have value. Today, a single Bitcoin is worth more than a small car. There are balances stored on a public ledger called a blockchain. So I'm guessing that now you would like me to explain what a blockchain is. So let me do that. Blockchain is a system that keeps a record of all the transactions across the network of computers. You see, this means that every exchange ever made will be permanently stored within that system. That is why blockchain is used for many applications, from music rights to shipping, art, and much more. Another thing you should know is that cryptocurrencies like Bitcoin or bitcoinvault are also mined on blockchain. Now, mining is a process in which a computer solves complex mathematical puzzles in order to confirm transaction on the blockchain. And then, as a reward, that computer uncovers a new coin. Usually, the value associated with the cryptocurrency depends on the difficulty in mining and the extent of market adoption. Of course, mining cryptocurrencies requires special equipment. So, if people want to start trading cryptocurrencies, they do have an alternative. They can buy it on an exchange. In the real world, when we talk about trading and exchanges, we are basically talking about the buying and selling of different types of assets and commodities, like cars, real estate, even gold. In a similar manner, crypto exchanges are platforms where you can buy, sell cryptocurrencies like BTC, ETH, BTCV, or XRP. Crypto exchanges also allow trading between cryptocurrencies. Most important thing that you need to know about the cryptocurrency trading market is that it is very volatile. To put it in simple terms, the prices change rapidly, sometimes even drastically and within minutes. And they may be related to something outside of the world of crypto. For example, positive unemployment data in the US, or the strengthening of Japanese yen, or, God forbid, the start of a major world conflict. But the fact that the cryptocurrency market changes so dynamically, it can be both a risk and advantage. You can pick crypto coins that will go up or down 5, 10, 20% in a day. That's something you don't see often in the stock or forex markets. The highest possible returns are usually in coins which are considered risky. So their value can go up or down very drastically. Let us now look at the cryptocurrency chart. Before we get into analyzing the chart, it is important to understand all the elements within the chart itself. Take a look. These here are called candlesticks. Each candlestick represents the movement of prices over a given period of time. The green candle, like this one here, means that the price has risen over a determined time period, while the red candle, like the one here, shows a decline in prices. The body of the candle shows you the difference between the opening and closing price of that time period, while the shadows at each end show you the highest or lowest point the price has gone over the course of that period. The x-axis on the graph shows the timeline, while the y-axis over here represents the price of the asset. So the candlesticks represent the price movement. Green for when it goes up, and obviously red for when it goes down. This horizontal green line here represents the current price of the asset. Also, underneath the main chart, you will see volume bars. They represent the volume traded under each candlestick in a set time period. Now I will tell you more about those. So, market volume can be defined as the total number of transactions observed in a specific marketplace over a specified time frame. In simple terms, this just means the amount of trade over a period of time. If we observe a daily volume of, let's say, $1 million, for example, it simply means that users or traders have bought and sold assets worth about $1 million over the past 24 hours. Simple. This is therefore a good indicator of the future price movements, and it can be very useful while traders plan their trade strategy and making an informed decision. With each cryptocurrency there is, we can observe something called a trend. Now, trends are patterns that can show us which way the price of cryptocurrency is moving right now. There's even a special section of technical analysis dedicated solely to trends. It explains different trends and helps traders understand what is happening with the price. The most common way to identify the trends is by using trend lines. They connect a series of lows and highs in a particular candlestick on the chart. So let's see how that happens. You see, trends are like waves that go up and down. It's like climbing a hill or a mountain. We can climb up, rest a little, and then continue climbing or go downhill. Similar fashion, cryptocurrency graphs have three types of trends. The upward trend, represented here by this green line, like the name suggests, describes the hike in demand, supply, or prices. Likewise, the downward trend, like the one here, shows a decline in demand, supply, or prices. while the sideways trend can be defined as a constant when there is neither a hike nor a clear decline. So, before you actually start trading, it is crucial to understand, uncover, and analyze where the market is heading. Whether the trend lines are predicting a hike, or are the prices going to tumble? You see, when it comes to market technical analysis, there are some levels of value that can cause a change in the trend of a cryptocurrency. And there are two levels here to be considered. We talk about the support level, when at a certain price level trends change from down to up, and similarly the resistance level, when they go from up to down. You might wonder how we decide where that level actually is. Okay, so it's usually determined by the market sentiment. Whether the other traders on the exchange are positive or negative about the future of the coin. When a price reaches a certain level a couple of times, but no one is willing to pay more or less than that, we set a support or a resistance level right there. The situation is usually followed by change of a trend. Of course, when the price finally crosses a certain level, this might also mean the beginning of a brand new trend. As you can see here, between April and May, the price oscillated around the support level in the vicinity of 7,000. Most of these support and resistance levels are usually round figures, or close to such. In this case, traders are waiting for Bitcoin to reach $7,000, or even a bit lower, and they are happy to buy at that exact point. And there is a large amount of coins changing hands here, as seen by the trading volume. At one point, in the first days of May, the price exceeds this level and rises further. It now has a brand new support level of around 9,000. The old resistance level is now the new support level, and vice versa. This is where a new group of traders think that if they buy at that price, the $9,000, they will be happy, as they think that the price is still relatively low. The price rises close to the 9,000 level a few times, but each time there are not enough buyers to keep the price above this particular level. We can see a trading activity for the next 9 weeks at around that price, and this is an example of something we called earlier a side trend. Then, suddenly, in the last week of July, the price starts rising. The rise was also visible in the trading volume here. It's another indicator that the price is about to change in a flurry of activity over the next few weeks, or days actually. The price then breaks through the $10,500 support and keeps on rising steadily to $12,500. This is where there are more traders who are willing to sell than there are those who are willing to buy. Mostly because those traders who bought Bitcoin in April had already doubled their investments in dollars at this price. So we can speculate that many traders have made a profit at this very point. They will sell Bitcoin and enjoy the returns. The general market consensus for Bitcoin at this point in time is it's not confident that the price will rise further. So let's take a closer look at the chart from the 5th of September to the 8th of September 2020 and understand the price movements of bitcoinvault against Bitcoin. Each candlestick in this bitcoinvault and Bitcoin chart represents a full hour in price movement. You see, different candles can be used, but generally for analytical purposes, traders find that hourly candles are very useful. You see, we can see that by connecting the laws, right here, there is an upward trend. As well as you can see that the price of BTC rises. And in a similar way, by connecting the highs, the red line over here, we can see a downward trend as the price of bitcoinvault drops. So now you can see the trends, and I hope that you understand what they are. Each candlestick in this bitcoinvault and BTC chart represents again a full hour of price movement. Using a technical analysis, we can understand that between the 3rd and 8th of September, bitcoinvault found a support level at 0.011 bitcoins. This is this green line over here, and a resistance level at 0.012.9 bitcoins. This is the red line here. These are key moments for the bitcoinvault price, at which there was a change in trend. It can be observed that once the price crosses the support level on September the 3rd, there is beginning of a new trend, and it indicates a future impact on the price of bitcoinvault. As you can see here, as soon as the price broke through the support line, there is a constant fluctuation sideways, indicating that the new trend is coming. So, now that you know the basics of the trends, let us move on to the trading and management of cryptocurrency by using different kinds of orders, okay? You see, on every exchange, there is something called an order book. It is the list of orders that are used to record the interest in particular cryptocurrency. The orders are bids and asks. A bid happens when a buyer would like to purchase a certain amount of cryptocurrency at a very specific price. And an ask happens when a seller would like to sell a certain amount of cryptocurrency at a specific price. The order book is also used to determine which orders can be fully or partially executed by matching the bids and asks. In this example here, we can see that the sellers in red want to sell BTCV for 0.01175 of a Bitcoin, while the buyers in green want to buy BTCV for 0.0118540 BTC. We call that difference in price a spread, and as you probably figure it out, the smaller the spread is, the more likely that the traders will be inclined to buy the coin. So now that we have covered the order book, let's talk about market orders. A market order is the buying and selling of cryptocurrency quickly on the marketplace. Market price is the most recent and current trading price on the exchange. It constantly changes, and it is determined on trading exchanges through the consensus of buying orders and selling orders. In this example we have here, we can see how the market buy order can be placed to buy bitcoinvault at a market price. Traders choose market option, enter the amount of bitcoinvault to be purchased, and click buy to make a purchase. It is as simple as that. There's also something called a limit order, and it is another option. It is an option to buy a cryptocurrency in a different way. You see, using it, traders make an order to buy or sell cryptocurrency at a very specific price. A buy limit order can only be executed when the price is exactly as set or lower. Before showing you the example, let me briefly explain the other terms you see here on the screen. Trading volume is the number of coins that are used in the trade. Volume is the amount of cryptocurrency you will get from the trade. In this case, it's bitcoinvault. The yellow line indicates how much of users' funds will use in a trade. Users can use 25, 50, 75 or 100% or anything in between. A sell limit order can only be executed when the price is exactly as set or higher. Now, look at the example on the screen. It shows a buy limit order of BTCV using BTC only if the price on that pair reaches 0.118568 of a Bitcoin. This means that the trade can only happen once the cryptocurrency value reaches the limit price. Okay, now that we have understood the basic tools that all traders have at their disposal, we can finally discuss why BTCV has dropped on the 24th of August. Here, you can see a chart from the 23rd of August with 1 hour candlesticks. The price was getting closer and touching support level at $360 here from about 1400 hours to the end of the 23rd of August. But at midnight, it broke the support level and the price went down significantly. You can observe that after the price dropped below the support level of $360, there was a huge spike in volume. It's over here. What's important to note is that people sold rather than bought bitcoinvault at that point. This only increased the sales pressure on Vault, which basically means that the price was pushed even lower. Since there was no strong support level, we must remember that BTCV had risen almost constantly since March, and it had not given traders a chance to create any real support or resistance mode. The price just drove down tremendously due to historically huge sellout. As you can see here at the bottom, that was the volume of the sales volume just tripled. And that just confirms that there was just more people willing to sell than buy at this very particular moment. This, in turn, caused further drops on price until the psychological support level of $100 was reached. And from that moment, the price bounced back to around $200. So how to manage funds? You see, every trade has its own set of risks, and cryptocurrency trade is no exception. So before you set out to become a trader, let's take a look at 3 of the primary risks involved. The first thing you should keep in mind is that the cryptocurrency markets are incredibly volatile, and the value of your assets can drastically change with no warning. The second important thing is that cryptocurrency transactions, apart from bitcoinvault, are irreversible. And the third thing that you must remember is that you may lose what you have invested. As a rule of thumb, do not use money you cannot afford to lose. Now that you know the risks involved, here are a few tried and tested practices that you should always keep in mind while trading. First, before making transactions, always double-check the address of the recipient, amount of the assets, and the transaction fees involved. Second, please remember to send only the correct currency to the correct wallet. For instance, sending Bitcoin to Ethereum wallet will result in loss of coins. Next, please use a personal wallet to store your savings. Next, please create your very own record of every transaction you have made. Another thing, please do not make any rash decisions. Think before you leap. Even if the price is going down, do not panic, and if the price is going up, do not be too hasty. For the first few transfers you make, please also use a small number of assets to check if everything is fine. If the wallets are fine, if the addresses are fine, it should help you immensely. Okay, thank you, because this is it for this webinar right now. And I hope that you will be more confident in trading and you know how trading works. And I will see you again very soon. Thank you.